I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again, a regular guest. He is from jsmindset.com. Also, the Holter-Sinclair collaboration is what they call it on the site. We're talking to Bill Holter. Bill Holter, thank you for joining us from Texas, the Lone Star State.
Thanks for having me on again, Greg.
One of your most recent articles, I just want to get into this Federal Reserve, talking about a December rate hike. If they want to crash the economy, they'll raise the rates. And your article points out that in the same breath they're talking about, not in the same breath, but in the same time frame, they're talking about raising rates. They're talking about 0% interest. What is it? What's your thumbnail sketch? What's the Fed doing?
Last week, when the Fed announced we may raise interest rates in December, the 2 days prior, Monday and Tuesday, they were floating trial balloons for negative interest rates. So, like you said, which is it? Are you going to raise rates or are you going to lower rates? Talking about raising rates is strictly to try to gain traction or credibility or retain credibility. They cannot raise interest rates. If they raise interest rates certainly within 2 weeks, and I would say probably within 2 days, within 48 hours, you would have a derivatives implosion all over the world and markets would not open on the third day.
What do you make of J.P. Morgan saying that 0% interest rates, what they call it, ZIRP, is hurting the economy and we really should normalize rates? So what do you make of J.P. Morgan coming out saying 0% interest rates is hurting the economy? I thought they all loved the free money.
Right. Well, they're correct. Zero interest rates has really gutted, if you want to call it the older middle class, because they've gotten 0% on their savings. So you have the older population is eating into their savings, and 0% interest rates. Who's going to lend money to a business at minimal rates below inflation, for a business to start up and grow? So yeah, ZIRP has hurt Main Street economy. It's helped Wall Street's economy. Now, why would J.P. Morgan come out and say that? I have no idea. I have no idea what the motivation behind it is. And I'm sure they understand that if interest rates were to rise, you will see a financial/derivatives implosion literally overnight.
And they raised rates just before Christmas? You talk about the Grinch that stole Christmas. What?
No, that's ridiculous. And plus we're within 1 year of a presidential election, assuming we have one.
Well, they're not going to raise rates in an election year, are they?
Right.
Isn't that going to pull it right off the table? Isn't that a totally political animal right there and then and there?
Right. It's never been done before. I don't think it's ever been done before. I'd have to go back and check, but typically they don't raise or lower rates in an election year. They may have lowered rates in 2008 because of the weak markets, weak economy going into the election, but I don't believe they've ever raised rates going into an election.
Well, let's talk about China and the banks, and I want to put all this together. Let's start with China. There's been articles out there, plenty of articles saying they got a big debt problem, a big real estate problem. They got empty buildings, empty Capitol buildings, empty apartment buildings. They, one report came out on Zero Hedge just this week that talked about, it could be as much as 20% of their loans are bad, and the math was it'd be $3 trillion black hole in their balance sheet.
Right.
Tell me about China and what are they doing? What are they going to do?
Well, they have had incredibly loose money, and when you talk about the ghost capital, the ghost cities, I started writing about that 2 or 3 years ago. That China used fiat debt to build real infrastructure, and when the system blows up, the fiat debt basically blows away, and they're left with infrastructure. Now, do they have 20% bad, 8% or 20% bad loans? They very well could. They probably do. And going one step further, if it's true that they're going to have a debt blow up, don't forget China has been importing gold, big tonnage of gold for years now. Just over the last, I think, 5 years, they've imported 9,000 tons of gold. Their way out is the old way out. The old way out was to revalue gold higher. I mean, they could revalue gold. They could just step up and say, we'll pay $50,000 an ounce or $100,000 an ounce for any and all ounces for sale.
And you think that's going to happen? Because this is, I know your comrade and buddy and my friend as well, Jim Sinclair says, it'd be $50,000 gold, and you were on one time, I don't know, this year or late last year, and said it might be ridiculously low. And this is what you're talking about. You're talking about how can they capitalize their entire system, with 1.2 billion people with 10 or 20,000 tons of gold, making 50,000 an ounce.
Right. You can't say there's not enough gold. What you can say is it's not priced correctly to support the system. And if they have an implosion of debt, which leaves their balance sheets impaired, the way to recapitalize the balance sheets is to revalue the price of gold higher. It creates capital, in other words.
They would revalue and back the yuan. The yuan wouldn't disappear.
Correct.
They'd say, okay, here's what the yuan's worth now. We want to be a or the reserve currency.
Right. And keep in mind that does not and can't work for the U.S. because we have offloaded our gold. I mean, simple math tells you that the gold that China's received had to come from somewhere, and that only somewhere in the world basically is Western U.S. vaults.
I mean, they lie about everything. Could they have lied about the gold that the U.S. has? I mean, Jim Rickards says that they wouldn't be so stupid enough to get rid of all the other people's gold, maybe, but the U.S. gold. So could they have lied about that when China revalues, the U.S. will revalue too? I mean, I'm just hoping I'm an American, I'm not a Chinese.
I think that's pure hopium that the U.S. still has the gold. Common sense and logic tells you that the gold is gone. China could not have imported the gold that they've imported because it didn't exist anywhere. There's only production of 2,400 tons per year. And if China's taking 2,000 or 2,400 tons per year, where's the rest of the world getting their gold from? Where's India getting their 1,000 tons from? It doesn't add up. It only adds up if the Western vaults come into play. And that's where the gold has come from.
Do you think that's what this is about in the Spratly Islands? Now the U.S. is saying that they're going to be down there every couple of weeks to poke at China, who's building all these islands, and it just looks like there could be a mistake or a war, or maybe they want to have a war. I don't know. Does that play in with what's going on? I mean, is this a hand in hand or a coincidence?
I don't think it has anything to do with gold per se.
I mean, the currency, the banks, the collapse, that kind of thing.
My opinion is what the U.S. is and has been doing is stirring the pot, heating things up, and the dollar traditionally has been, quote, the safe haven. So we have seen capital inflows into dollars. I also believe that the U.S. ultimately is going to need something to point at. They're going to have to point at something, a war, to be able to say our policies would have worked, but they didn't work because we had this war. It's something to blame what's going to happen on.
Well, what about this big grandiose budget, couple-of-year deal, and woohoo, we're spending more money than ever. I mean, we raised the phony ceiling. There is no ceiling, really, because every time we approach it. So is anybody, wow, well, I actually read one headline or one saying that, well, if we didn't raise the debt ceiling, then the other option is just disastrous. Like, that can go on forever.
Well, that's true. If they didn't raise the debt ceiling, it would have been an immediate implosion. But you have to understand, Americans are the only people on Earth that aren't laughing at the debt ceiling. Foreigners are laughing at it. You're talking about $20 trillion. It can't be paid. We're at 110% of GDP already, and we're the reserve currency.
Well, then there has to be a problem with the U.S. banks, because if everything was okay, you wouldn't have the S&P putting on a ratings downgrade watch all the big banks, J.P. Morgan, B of A, Goldman, Morgan Stanley, State Street, Wells Fargo, Warren Buffett's bank. What's going on? I thought they were fixed.
Well, they never were fixed. They weren't fixed in 2008. They were fixed with liquidity, and that was a solvency problem. You can't fix a solvency problem with more liquidity. What the added liquidity did was blow the bubble that much higher. You're seeing it in many different sectors. You're seeing it again in real estate. It's another bubble. It's going to burst, and the banks are in worse condition now from a debt to equity standpoint. It's the same thing. Nothing has changed. It's just bigger.
Well, is this why that we had this piece about the warning, and the next time this blows up, there won't be anything done? I mean, the next time this blows up, what does that mean? We're all just going to be running around in animal skins with pointed sticks, stabbing each other? I mean,
and that could happen. You think about it. Who's going to come in and save the day? We had the ability, the U.S. Treasury had the ability to lever up further in 2008. The Federal Reserve had the ability to go from a $800 or $900 billion balance sheet to over $4 trillion. Who's going to be the white knight? Who's going to come in and save the day? You already have the Federal Reserve buying treasuries on the open market because there's not enough demand from the Chinas of the world. They're actually sellers.
And who is buying the U.S. debt? Who is buying this debt?
Well, a good part is being scoffed up by the Fed.
So the Fed is just forced to monetize this debt. And
right.
Are you saying that China is, I guess what I'm hearing is that China is in like the same boat the U.S. banks are in. They got a big holes in their balance sheet. The only thing is that China has a whole card, gold.
That's the whole card, exactly. And of course, they do have a manufacturing base. They have new infrastructure. They're not a declining civilization. The U.S. is in decline. It's in decline everywhere. Our manufacturing's gone. The infrastructure is broken and falling apart, and we have an over-leveraged financial system.
And what are you estimating that when this thing does pop, and what do you think their gold will have to be reevaluated at? I mean, that's the big question is, A, how much do they have?
Who knows? And any number that anyone comes up with is a guess, and any number that anyone comes up with is probably going to be too low.
So people that say, wow, it could go fivefold, 5,000 an ounce or 5,500, you're saying it would have to be more than that to actually recapitalize them?
To recapitalize the U.S., assuming that we had the gold we have, you're looking at, I don't know, $70,000 to $100,000 an ounce, and
that's 8,000. The math is 8,000, 2,000 tons, or let's say 8,000 metric tons,
right.
And then how many ounces in there? And you're saying that the debt is so big to suck it all up, you'd have to have $70,000 to $100,000 an ounce. The
right.
math would be that would be the fiat value of the gold,
and that's assuming $20 trillion worth of debt. The U.S. truly has over $200 trillion worth of debt.
Well, according to Lawrence Kotlikoff, yes.
Right, future obligations, Medicare, Social Security, loan guarantees, etc. It's over $200 trillion. So now you're talking about, you got to add a zero or another zero. So to answer your question, it's not a fair question.
It's an unbelievable amount, really, in relative to fiat dollars, because people can't grasp the amount. You were comparing it to the size of the fiat debt. Let's just say $20 trillion.
And we don't know what the size. Your question was, what would it need to be to make China solvent? We don't really know how much gold they have. They probably have more than what we suspect, and we don't know how much debt they have altogether. So it's a hard question to answer in terms of yuan. It's almost an impossible question to answer in terms of dollars. because if we have no gold, then one side of the equation is zero, which makes the other side infinity.
And you're saying that you and Jim have talked about this, and you say this is China's end game. This has to be their end game. We know the records show they've been importing tons of gold. We know they don't sell any of their production of gold. And you're saying that this is just has to happen. When it goes, China will recapitalize with gold.
Well, they knew this back in 1971 when we went off the gold standard. When we stopped shipping gold for $35, when we stopped shipping gold to foreigners upon demand, China knew, Russia knew, they knew that we were going to fail. Fiat currencies always fail. It was a matter of when. And here we are, what,
40 years later?
Yeah, 44 years later. 44 years later, to the Chinese culture is like 10 minutes to an American. I mean, it's they think in terms of 100 years. We think in terms of next week.
Yeah, that 1 quarter.
Right.
And I wanted to bring up Saudi Arabia because Saudi Arabia and Russia apparently are meeting, which should send, I don't know if people really understand how the dollar, people say the dollar isn't backed. Yeah, it is, backed with oil.
Right.
In fact, the petrodollar. So what do you think the significance of Saudi Arabia and Russia meeting together? I mean, they've been having proxy wars. Actually, now Saudi Arabia has been funding ISIS, and so has the U.S. and Qatar and other people. So what do you think about the meeting between Saudi Arabia and Russia? What's going on there?
It's very significant. As you said, the dollar has been backed by. It's been the petrodollar. It's been backed by the velocity and the settlement of oil trade. And now you're seeing a couple things. You're seeing less velocity. There's less use of oil. And you can certainly see that. Just look at the Baltic Dry Index. That shows global GDP is definitely declining. There's less demand for oil. Plus, the price of oil has dropped from $100 a barrel to under $50 a barrel. So that's, again, less dollars that are required to purchase oil. So there's less demand for dollars. You go one step further, and you had over the summer, I believe there were I think there was 5 or 6 trade negotiations between Saudi Arabia and Russia, and call this round 2. At some point in time, Saudi Arabia is going to say, we'll take rubles, or we'll take yuan, or we'll take euros or yen or whatever. And you've seen...
For oil.
For oil, exactly. And you've seen leaders before, Hussein, Gaddafi, they've been displaced because of that.
And you think the U.S. would...
One other thing, Greg, don't forget this past week, and we can talk about the plane blowing up too, the U.S. has been pushing Russia. And this last week, Vladimir Putin came out and said that there will be not only no trade settlement in dollars, but also no trade settlement in euros with Russia. So they're really taking a hard line and saying, if you want to trade with us, you're either going to use rubles or you're going to use yuan. And that's a big deal.
And how fast can this metastasize to the point where all of a sudden nobody needs the dollar? I mean, paint the picture for me. What could happen and how fast could it happen?
Well, it's been happening. It is happening. And I suspect it's going to be part of the reset. It's going to be part of the bank holiday. It'll be like a light switch being flipped.
What does that mean?
It means you could go into a weekend and everything's fine, and you wake up Monday morning, and along with the financial system not reopening, we find out that foreigners don't want to accept dollars for trade.
And how could Saudi Arabia put the kibosh on this? Just start telling people they'll accept something else, and then what happens to the dollar? All these dollars come flooding home, and we have huge inflation.
Well, it would be the dam is leaking at this point. because there's less and less use of dollars around the world, and that's a function of China's trade doing in yuan. But you could say that were Saudi Arabia to say we'll accept euros or we'll accept yuan or rubles, or in the extreme, if they were to say we won't accept dollars anymore, that's like just pulling the centerpiece out of a dam. It'll break and it's over for the dollar.
And you think they could actually just say we're not going to accept dollars?
Yeah, they could do that. They'd probably get bombed back to the Stone Age, but I'm sure that's been talked about. And they talked about with Putin when King Solomon meets with him in the near future.
And you think that it has something to do with the financial warfare? That this isn't just them cutting some deals and doing some business and a few people making some money in Russia and Saudi Arabia. Yeah, this is a strategy by Russia to get the dollar to not be the petrodollar anymore.
You'd have to be naive to think that King Solomon is going to go to Moscow, have a cup of tea, say nice to see you, and turn around and leave. This is not strictly, I was going to say this is not strictly business. It is business, but finance/war are interchangeable.
Do you think that Russia would have to tell them at the table, hey, listen, you got to stop with this ISIS thing. You got to stop funding these people because we're going to go after them. We're going to tear them. We're going to kill every one of them if we can.
You would certainly think that that's going to be on the table.
I
mean, why wouldn't it be? It's pure logic, because they're at two different ends of the spectrum. Russia and Saudi Arabia. They've got it. Saudi Arabia will probably be told it's our way or the highway.
By the U.S. or by Russia?
By both, probably.
And we're sending 50 special forces.
I shouldn't laugh because...
well, it would be funny if it wasn't so
right, because you're talking
serious and deadly to the people we're sending.
Right, you're talking about 50 lives, and those are more than likely 50 lives that are going to be lost. I mean,
I hope you're wrong, but
50 people. For what purpose? I can't even fathom.
What does this tell you about what's going on in the Middle East? Does it get ramped up from here, or do these guys, do we just walk away, or what? How is this going to end? I mean, to me, it's just ramping up further and further, deeper and deeper, greater and greater warfare.
Actually, with what's happened over the last few weeks, to me, it looks like the U.S. is being kicked out of the Middle East. That's what it looks like to me. That we're backing away, and you're seeing a Sino-Russo movement into the Middle East via business deals, via not treaties, but handshake deals. You've got Russia backing Syria. It's very confusing, but to me it looks like the U.S. is being kicked out.
And one other thing I want to talk to you about, you're having a question and answer session, I think, in California, middle of the month. And I talked about this in the pre-interview. This isn't a surprise question. One of the things I get from people all the time is, a lot of folks have thought that this would end, and a lot of folks that this would be, had called that this would be a crash in 12 or 13 or 14 or 15.
Right.
What are you saying to people as to, well, I know why it's going on, because it's fraud and money printing and accounting trickery and just unbelievable amounts of money printing. But what do you tell people as to the timing of what's coming down the pipe and what they should be doing? And what are you going to be telling people in this question and answer session? You
pretty much answered the question yourself. We're basically no longer a society with a rule of law. When I say a rule of law, there's all kinds of fraud. There's all kinds of just look at the economic data that comes up. 2 + 2 doesn't equal 4. You have just ridiculous reportings coming out of Washington true lies coming out of Washington. You have money being printed. There's no longer mark-to-market with the banks, so the banks don't have to really tell whether they're solvent or not. Adhering to a real rule of law, we would have collapsed in 2012, 2013. But those laws were bent, those laws were abolished, and I'm talking also about the laws of Mother Nature. There's really no way to say how long they can do this. The one thing I have said all along is when the last ounce of gold gets delivered, then it's game over. In other words, when China buys and pays for a ton of gold and they don't receive it, that's when it's game over, because then they know there's no more gold left to bleed from the West. And that's what this has been all about. It's been a transfer of wealth from West to East. When the East pays and doesn't receive gold, they'll pull the plug.
Is that coming soon?
You would think so. There's, if you look at just take a look at what's happened on COMEX this past month. It's now, I believe, 5 weeks, and we've seen almost, I think there were a grand total of 2 deposits into COMEX, and those were both customer accounts, not dealer accounts. They started the month of October, which is not a big delivery month, with 10 tons standing. It bled down to 3 tons. It finally stood for delivery, and there's no evidence at all that that 3 tons was delivered. Now, December's a big month. December is the biggest month of delivery, and it very well could be that the last ton or the last ounce coincides with the big delivery month of December.
And final question, I mean, Jim Sinclair is very wealthy. He doesn't need to do this for $100 a head. That's just covering the expenses, I suspect. I mean, if you have a couple hundred people in there, by the time you get done paying for airfare and meals and his assistant and you and him and whatever, there's about 3 or 4 people that would be traveling to these things. Why do this? Why you don't need to do this either, really. You have made a nice way in this world. Not that you're Jim Sinclair, but you don't really need to do it. Why do you guys do this?
In the hopes that we can wake up just one person. And obviously there are going to be the people that generally go to this are people who are woken up, but hopefully the people that go bring a friend who has their head in the sand. And we have been through a 4-year period of time where paper gold has been pounding the price of gold, and you have people that were just strong-legged, hard money people that are weak in the knees now, and they shouldn't be. This is, I'm sure we're going to get lots of questions, and my hope, and I know it's the same with Jim, is that we can strengthen some weak knees not to sell your only insurance in a financial Armageddon.
It's still coming. They just put it off, is what you're saying.
Oh, absolutely. I mean, it's mathematically coming. There is absolutely no possible exit with the system intact and a rule of law.
They just put it off.
Exactly. It's been postpone, pretend, and extend.
And this is in El Segundo, California. When it's on your site, right? All the details.
It's in L.A. Yeah, all the details are on the site. I believe it's a block or 2 blocks from the airport. It's very close, very convenient to the airport. So if you wanted to fly in, I believe it's from 1 to 4. We'll probably go to 5:30, because the questions usually last a long time.
All right, I'll link to the site. Folks, that was Bill Holter. Bill Holter, thanks for joining us today. Bill Holter from jsmindset.com, also the Holter-Sinclair collaboration. Bill Holter, thank you for joining us today on usawatchdog.com.
Thank you, Greg. It was my pleasure.